Should we buy or sell the Spain ETF? First off, read this disclaimer carefully. And do your good deed of today by liking and subscribing. So here we have a bunch of stock markets, and we do have Spain here under Southern Europe. 14% here from the low, minus 17-ish% here from the 52-week highs. So this market is definitively heading for a bear market, but you could also argue that it's been in a bear market for a long time, because we have to go pretty far back to see Spain in like clear bull mode. So here you have a bull market for Spain, but ever since those highs here in 2007, we have essentially been making lower highs and lower lows. So that is the very definition of a bear market. If we measure here the range, so you could argue that Spain has been in a bear market over the last 5,229 days. That is obviously quite a bear market. Throughout this pretty ferocious bear, we have seen this. Okay, that's not the right tool. We want to use the time cycles tool, like that. So there's been time cycles. The time cycles have differed a bit in duration. So approximately something around here, that's where we find the time cycles. The current time cycle, and you do see that these time cycles have been rather reliable. We are not towards the middle yet. If you look at this time cycle here, this one, it peaked very early. Here we peak more towards the middle, a bit early. So there is a risk of us peaking earlier than we sort of quote unquote should. Another thing here that just jumps at me, that is the risk associated with the blue 100-week moving average. So let me just draw that in. So you can see that it was a surgical resistance level back here. Here it came also back. This week it was an issue. Granted, it is also a level that can be used as support here, as you can see by the bulls. So it basically is a moving average that is a big deal. We are currently below that moving average. So there is an increased probability that it will offer resistance, especially given that this purple 20-week moving average here is now a resistance level. Was support back here, it has now become resistance. So the technical picture here is there's issues ahead, basically. Here we have the daily data points, and we do see that we have seen a pretty nice rally here from the lows. The key level here would be the 50-day in green and the blue 100-day moving average. Those are levels that have been relevant in the past and will be relevant going forward. In this case, most likely offering some meaningful resistance. So the only caveat I have here in terms of the more bearish thesis is that we are bouncing from a very low level on RSI. You see that historically we tend to explore also the upper regions of RSI, notwithstanding that we have been in a very protracted bear market. When we go here to the daily data points, we do see that accumulation distribution is holding up, at least to an extent. We did see that we have this higher level here, and notwithstanding the downtrend here in price, there's been some reasonable volume here. Looking at daily RSI, we are close to previous fail levels, but you see that previous times we have had rallies like back here and here. We did actually go a bit higher before we failed. So let's take some notes. So yeah, Spain. I think that the key level here to watch going forward is definitively the blue 100 VMA resistance, and put a bit of a question mark because we don't have interaction with that level yet. But it was obviously very relevant in the past, so it's very likely going to play itself out. In terms of giving the technicals here a bit of a rating, so we did have a bit of a from a big picture perspective, we do have a major bear market for Spain, lower highs and lower lows over a long time. We have also seen that we are part of a time cycle that it might have a bit left in the bullish part of the time cycle, but the next big move is to the downside as far as the time cycle goes. So I do think I will give this one to the bears, but not in like a huge way yet. It's more like there are more worrying signs here for the bulls than the bears. The bears have things that could benefit them meaningfully, more than what the bulls have. So next we will look at seasonality. So when we look here at the average price action here to the right, we do see that there is a tendency for there to be strength here in red over the last 10 years, peaking around May. Also in blue here over the last 7 years, usually it's a bit bullish. And also here in terms of the last 5 years in green. So the seasonality here towards May is decent. When we look here to the left, March is very weak, but April is very, very strong. Then we have the last 10 years. Yeah, April is really strong. Then the last 20 years shows us that. So we are currently in the later part of March. The next month is very strong, but May is actually one of the weaker months. So the seasonality data here is a bit conflicted because on the one hand, there usually is a bit of a weakness in the current month, but there's usually strength here heading into April and also to an extent extending into early parts of May. So I do think that I will give the seasonality here to the bulls. I will subtract a bit because the bulls don't really have that much in terms of the seasonality for the current month. But yeah, overall, the seasonality here looks decent for Spain. Here we have the fundamentals, comparing Spain against, the S&P 500, which is the most obvious thing to compare it with, because S&P is the major index that swallows up a lot of the money. So here we have the beta in Spain is actually a bit lower than the S&P 500. PE ratio 19 versus 22-ish, so a bit more value here. Let's actually get a bit of an accurate reading here on the valuation, like that. This is of course purely looking at PE, but PE is watched by so many people that it is a big deal. So yeah, PE is minus 13-ish% lower in Spain, so there's more value. The dividend is very juicy, 3.25% dividend. That is a valid yield. Especially compared to the 1.22% here you get for the S&P. Now looking at holdings, let's just scroll a bit down. Finance is big, followed by utilities. So it's really nice actually to have such a big exposure to utilities because it's more of a classic safety trade. Communication services is also has a certain level of safety in it. So I think that the sector breakdown here, it's very interesting, especially in our current times of more uncertainty. So in terms of giving the fundamentals here a rating, so there's a bit more value, there's a fat yield. The sector structure is very much, it's potentially beneficial in terms of the current uncertainties in the markets. So I do like that. Maybe I actually will give the fundamentals here a 5. This was quite solidly, especially the yield was really nice. That was a fat yield. Next, we will look at relative performance. So here we are comparing the S&P 500 with the EWP, Spain, 27% long-term correlation. 62% here with VGK, which is the Europe equities ETF. Minus 2% here with the Euro index. Minus 31% with the dollar index fund. Daily data points. Then we have 19% with the SPY. 83% VGK, and then we have 49% with Euro, and minus 80% Yeah, 89% here with the dollar index. So the strongest correlation we do get here is with VGK. So let me just do a quick technical analysis of VGK, because that is the one that will have the biggest impact on Spain. So we have seen a very strong bounce here from support. 200-week moving average just goes to show you that these moving averages, they are a big deal. We have also just been skyrocketing through a possible resistance here at the blue 100-week moving average. So 200-week, 100-week, both are now claimed by the bulls. We are emerging from a very oversold level. So this is a messy situation, because when I look at this, it's very difficult to buy this, because we have already seen a strong rally. Then again, it's also one of those situations where it's not really comfortable to go short either. So it's very messy, because if you look here at the distance here between price and the 20-day moving average, we are literally at levels that have triggered previous pullbacks. Looking at RSI, however, we do have lower highs and lower lows. That's an issue. So yeah, messy, just messy. That is just something that happens in the markets. Sometimes you have very clean setups, but other times, especially after sharper moves like a sharp bounce or a sharp sell-off, then it can be messy. You have a bullish points, bearish points, so just more noise. So here you have the relationship between Spain and Europe. So you see here that Spain, it's been underperforming the Europe ETF ever since September 2009. So a very, very, very substantial and pretty substantial downtrend here. And there's no signs of anything else. Nothing bullish here, especially in terms of the weekly data points. If we do look at the dailies, you could be a bit of a contrarian and argue that we have something that looks like an inverse head and shoulders pattern. So you got the shoulder, this could be a head, and maybe we form a right shoulder. That is a bullish technical setup. Now let's see whether the seasonality corroborates it. So over the last 10 years, bearish. Over the last 7, we usually have some strength here towards April, but then it falls apart. Over the last 5 years, strength towards early April, and then seasonality gets weaker. So yeah, the seasonality data does not really corroborate. It doesn't substantially increase the odds that we will see a major inverse head and shoulders pattern here for Spain. But we do have a potential inverse head and shoulders. Now let's look at the relationship here between VGK and the S&P 500. So yeah, Europe has been underperforming the S&P 500, ever since 2007. Lower highs and lower lows. Absolutely no sign here of any change at all. We just have a bit of a bounce after a sharp sell-off. Looking at the daily data points, I mean, this is just a textbook downtrend. If we look here at the seasonality, over the last 7 years, bearish. Well, 10 years, 10 years, 10 years, 10 years. Okay, red in 10. Bearish, 7, potentially some strength here towards May. Over the last 5 years, usually a bit of strength here, but then it quickly falls apart. So in terms of giving a relative performance here, a bit of a rating. So the situation for the Europe ETF is a bit messy, noisy, not clean. It's a bit troubling that we are literally at the levels on the 20-day PPO that has triggered many of the previous pullbacks. So that's risk. But that is just one indicator of many. But yeah. So Spain could potentially form an inverse head and shoulders against the Europe ETF. That could, move money from other European countries into Spain. The sector structure in Spain is interesting. You got that nice yield. Then again, that is in the context of a protracted downtrend. So I think that overall, I actually kind of have to give this one to the bears. There's just not sufficient amount of bullish data here on the relative performance. Okay, so the final score here is a 1. So a perfect 1 of a possible maximum 9 bullish points. So you do see here that the data is actually a bit more bullish than bearish for Spain. The line in the sand, which would be a bit of a no-no, that would substantially weaken any kind of bullish thesis, overall thesis, would be if 100-week moving average offers resistance. So any kind of sign of weakness there would be a substantial problem. Okay, so whatever you do, of course, you want to use stops and definitively be market neutral, because there are so many news events that we don't have any control over that can substantially affect the market. Because yes, we live in, I think it's fair to start to call this, a bit of a world war-ish situation. Beyond that, from a more like economic perspective, a bit of a game changer this week is that it became now clear and official that India has, been buying a lot of oil from Russia, and it was paid, through rupees and rubles, and that's very interesting. This entire situation here with the dominance of the dollar, it could genuinely be threatened in a way that we have never seen. Well, we haven't seen. This is very substantial. So definitely a lot of uncertainties on the horizon here. That is why I'm a huge fan of being market neutral at this point, because all of the technicals, all the seasonality that we have talked about here, it can all just be thrown right out of the window if some big news event happens.